Hey guys, Josh here, and today I want to show you guys the stochastic RSI reversal method for day trading. This is one of my go-to strategies, and when you have a market that is choppy, or at least a chart that is choppy, it can be very effective. So I'm going to do a couple things here. I'm sharing my screen, and I'm just going to pick some charts based on how I trade. And then I've also got a spreadsheet here where we're just going to go through the charts and look at some of the trades. And I'll explain this spreadsheet here as we go. But basically, I want people to have at least a $26,000 starting bankroll. The reason for that is because then you avoid the PDT rule. Not that you can't do this if you have less. I know a lot of new traders out there start with 500 bucks or 1,000 bucks or 5,000 bucks. Certainly, I think the vast majority of new traders start with a lot less than $26,000. So you can still use this method if you have less. It's just easier to do it with more money because you're not going to hit those daily account maximums. So you can do this same system and follow the same method on a much smaller scale. So if you've only got 500 bucks to start with, 1,000 bucks to start with, whatever the case may be, you can do it. Just realize that you're not going to turn 500 bucks into a million overnight. So anyway, without any further ado, let's jump right into it. So I'm going to start with this is Fidelity Active Trader Pro. You can see right up here. It'll work for any platform that you use. It's not specific to any particular platform or brokerage firm or anything like that. You can use it. If you've got, I recommend Fidelity. That's who I've been with for about 30 years now. I also like Vanguard as a company. And I also like TD Ameritrade, which has the Thinkorswim platform. If you're new to trading and you want a real broker that'll never run into liquidity problems or capital requirements, uh, uh, freezes on trades or anything like that, I would say stick with Fidelity, Vanguard, or TD Ameritrade. They have the best. They are the best brokerage firms on the planet, in my opinion, and they have the best platforms. So if I didn't mention some of the others, then there's a reason why. Anyway, let's hop right into it. So I'm going to be looking at SPY. I use SPY, and that's typically what I trade. You, but I would say you could also use this method on any of your, I'm going to say top 25 companies out there in the Nasdaq or S&P 500. I wouldn't use it on some of the smaller stocks. Definitely don't use it on penny stocks or things like that. Bob's Garage or whoever, right? Stick with like Meta, Apple, Amazon, Netflix, Google, Microsoft, Tesla, and Nvidia. The heavy hitters. So just stick with stocks like that that have tons and tons and tons of volume and liquidity so that you can scalp and get in and out of your trades quickly. So anyway, today's SPY, or I should say Thursday, SPY closed at 49. It was up $6, some change, about 1.3%. So since it was up basically $6, it basically means that SPY started the day at about 483, roughly. Technically, it was like 42.90 something, but we'll just say, just rounding to whole numbers just for the sake of argument. Just say 49 minus 6 would be 483. So typically what I would come in and do is I would look at the call charts at 483. Okay, I'm going to go ahead and pull up a chart. And then I would also pull up at the same time a put chart of 483. This is one of my go-to strategies. It's how I scalp and trade every single day. I always bring up a call chart and a put chart. And for the trending, I just trade whichever one is going up because the goal here, even with the scalping method and the reversals on the stochastic RSI, the goal is buy low, sell high. So I don't really care if the market goes up or down on any given day. I don't care if the S&P 500 is up or down on any given day. I just want to follow the chart that is going up and try to take advantage of those gains. So, but just for the sake of this example, since the day is green and it was up 60 points here on the S&P 500, I'll choose an at the money strike price. And in this case, yesterday was Thursday, February 1st. I'm going to be using the February 2nd chart because that's what I would have been trading. Although sometimes since it's only one day till expiration date, you can do it either way. It's in my opinion, it's a little bit more conservative if you actually look at the daily chart. So if you were on February 1st and looking at the February 2nd charts, because that's the end of the week, it's Friday, it's when all those options expire, you can actually make your decisions based on the February 2nd expiration date. But when you're actually placing your trades, just hop on over and go 1 week out and place your trades for the exact same strike price but 1 week out. The reason I do that is because it gives you more time to be right. Also, because some firms, not that it would matter on a Thursday from a Thursday to a Friday, but some firms don't allow 0 day trading. I personally don't like 0 days till expiration date options because you, in my opinion, like you have to be right and the stock has to go your way. And if it dips down even for a little bit, theta is working against you, the clock is working against you, and it can be very, very difficult to recover if your stock goes the other way. So I personally just don't like the 0 DTE. That's just me. Anyway, uh, none of that is really that relevant today. I'm here to talk about the stochastic RSI indicator and trading the reversals. So I'm just going to jump right into it. What I do is I just pick I'm going to pick SPY. I'm going to pick the strike price 43 because that's about what it opened at for the day. I'm going to change my chart here. I don't like the OHLC charts, just preference. I like the candlestick charts. Okay. And then I'm going to go to my indicators, and the one that I'm going to choose is the stochastic RSI indicator. This is a combination actually of two different indicators. It's a combination of the stochastic indicator on the first part, and then on the second part, the RSI, which is this right here, the relative strength indicator. In a lot of cases, they're going to look similar, except that some of the extremes for the highs and lows just happen a lot faster when you add the stochastic to it. So for trading today, this is actually what you want to see here is when you have a bunch of highs all the way at the 100% level on the stochastic RSI indicator, and then a bunch of lows as well hitting zero. And typically what I'm looking for is a line on one of these stochastic lines that starts above the blue line. This blue line right here is the overbought line. It's the 80% line. And this red line here going across here, the horizon, is your oversold line, meaning below 20%. So it goes from 100% all the way to zero, but you've got an 80 blue line and a 20 red line here. What I'm looking for to start my entry is a line that goes on a steep cliff jump, is what I would call it, like this, where it starts above the blue line and then goes straight down all the way below the red line and then hits zero. You see the score here that everywhere on this line, you get a score of, like right here above the blue line, that score is 87.75. Okay, it's above the blue line. And then it jumps down all the way below the red line and actually hits zero. That's going to be my entry right there. And you can look up here at the OHLC, the open, the high, low, and close, just to get an idea of what the low is. Okay, it's going to have a low there of $3.61. So I'm going to go into my spreadsheet here and I'm going to record that and say I'm going to buy as soon as it hits that zero. I'm going to buy at $3.61. Okay, and then I'm going to sell as soon as it goes back above the blue line. Okay, and I also have a stop loss in place. So in here, I hit zero. I'm at the low of $3.61. If it drops 10 cents or 10%, whichever is less, I'm going to go ahead and set my stop loss at that 10-cent level or 10% level. In this case, 10% would be 36 cents, which is too high. So if it drops down to 351 or below, I'm going to take a stop loss at 351. I don't allow myself to lose more than 10 cents. So it comes back down, hits 354. Moves over, goes to 346. Okay, so my stop loss would have hit before I was actually successful on this trade. So my first trade of the day, I actually would have been out. Okay, I would have taken a loss on this one. I got in at 361. I have a 10-cent stop loss. I would do 25 contracts. And the reason this changed to 3 is because of what you're going to have as the max per trade. So if you've got a $26,000 starting bankroll, no trade should be any more than 5% of your account, which would be $1,300. So in that case, since this is so expensive, this is $3.61 times 3 contracts. Okay, it actually rounds down to, well, it's 3.6, but that would round down basically 1,300. Okay, divided by $3.61 times 100, like how many contracts can I buy and stay under that $1,300 cost basis? Okay, so you'll see over here at a cost of $3.61, 3 contracts is going to cost me $1,083 plus fees, but it's below that $1,300 level. So all of my trades here, if I'm starting with 26,000 and I'm limiting all my trades to no more than 5% on any given trade, then my max trade is going to be $1,300. So I can't go 4 contracts here, because if I did this, that means that would put this over $1,300. Okay, so I want to stay under that, just as a protection and bankroll management rule. I want to protect myself on the downside. Okay, so on this very first trade of the day, I'm going to take a loss. I got 3 contracts. I was in at 361. It actually dropped below 351. I'm going to have a stop loss at 351 because I don't want to lose more than 10 cents per trade. I'm going to take a loss. I'm going to be down $34 so far. Okay, so now I'm going to go to the next trade. Okay, so I got out here at 351. It stays low, comes all the way high, stays high for a while, and then right here we have something similar. We have something that goes from above the blue line, but it's 82. In my opinion, it's not quite high enough. If you wanted to, you could take a risk on this, and we'll just do the math on it to see how it works. What I really like to see is something that goes from 100% all the way down to 0% in one straight line. And we're going to have an example later on today, like something like this. So this one here goes from 100 all the way down to 0. That's your textbook type trade. I took this one only because it was early in the day and I was at 87 and it went all the way to 0. So I went ahead and took that trade, even though it was a loss on my very first trade of the day. Then it climbs all the way up. If you would have held on, it goes all the way up to the very high. It actually dips down, then comes back high. It actually does hit a high here of 405. If you look up here on the OHLC, it actually does get up to a high of $4.05. So you could say there was a potential for a gain there. If you just want to keep track of that, it had the potential to have 4.05, but you could have gotten in at 361. I took the stop loss at 10 cents because it dropped back down, even though it did go back up to 405. I just tell myself, okay, I missed out on that one, even though I took a stop loss. So then I come along, comes to the bottom here, comes back up to the top. It is at 100. It drops all the way down. It took a while to get there, but it drops all the way down to 0 as soon as and then it goes sideways for a little bit. But as soon as it hits 0 right here, I'm going to make another trade, and I'm going to take the low price of $3.62. You can see that up here on the OHLC. Okay, as soon as I highlight it, the low there is $3.62. So I'm going to take my entry there. Happens to be just a penny more than my first trade. Okay, and then it continues to go down. It actually had a low of 342, so which is below 352. So I'm actually end up taking a stop loss on that one as well. Okay, 3.52. 3 contracts. I'm down $68 for the day. My first 2 trades were losses for the day. Obviously not a good start, but it's $68, so that's not all that bad. Here we go from above the blue line, we go down, but we don't hit 0, so we don't take that, and then it comes back up and comes back down. Since this is a jagged and actually doesn't come down, I actually don't take this trade at all. So I ignore all this, comes back up, goes down, doesn't hit 0, comes back up, 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 up. Our next one is here when it comes all the way, it was up at 100. Takes a little bit of a jagged downward path there, but it comes all the way to 0. So I'm going to take another trade and another entry here at $3.54. That's my low on the LHLC. Oh, I'm sorry, OHLC, open, high, low, close. The low there is $3.54. So that's $3.54. Okay. And then it immediately goes right back up, gets above the blue line, and has a high of $3.80. So that's a good trade, 3.8. Okay, we basically got our money back, and we're up $7 for the day, $7.80. Okay, $3.80. It immediately goes back down. It's 0 again. Okay, on the stochastic RSI indicator, and that low there is $3.66. So I'm going to get in again, $3.66. 66 cents. 3 dollars 66 cents. 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 66 c on the low, and then it comes right back up to the high, goes above that blue line. It actually keeps going a little bit higher. So if you were maybe a little bit more aggressive, you could actually let this keep going up and ride it all the way to, it goes all the way, look at this, it goes all the way to $4.89. But that's, I'm going to get out as soon as it hits 100. So the first time it hits 100 is right there at $4.22. Okay, now I've got 4 trades for the day, 2 wins, 2 losses, but I'm up $171. And I'm keeping track of my total cost over here, because if you've got a $26,000 account, uh, you're probably not going to run into maximums because you should have margin trading on your account anyway that'll allow you to go over. But I keep track of my cost over here, the total cost of all my trades, because it's something that if you had less than $25,000, you might hit that PDT rule and be capped there if you start to get close to that number. And also, if you've got less than $25,000, you're going to be stuck for the day anyway because I've already made 4 trades. So this is why, in my opinion, it's very, very important to have an account that's above $25,000. I just say 26,000, just so you've got a little bit of wiggle room there, especially when it comes to commissions and fees and things like that. So have at least 26,000 to start. Okay, so let's keep going. I got out right here. What did I say? 422 when I got to 100%. Comes along here, has a high. It's at 100%. Drops all the way below, hits 0 right here. So I'm going to have an entry on a low at $4.50. Okay, $4.50 is my entry. Where's the low right there? Oh, right here. Okay. Low, I get right on $4.50. It's going to have a low of $4.32. So that's, I'm going to have to take a stop loss on that one at 4.4. I have a 10-cent low or a 10-cent stop loss. So I'm going to take a loss on that one of 10 cents. Hits 0. Now, if you wanted to, if you were pretty aggressive, and I usually am, it hits another 0 right here. What I might actually do in a lot of cases is I'll take the trade right here at 450. I'll take that stop loss at 440. But since it's hit 0 again and it's below that, I'm going to take another trade here at $4.32. Okay, so I took the stop loss at 4.4 because it dropped 10 cents, but it wasn't at 0. It didn't hit 0 again until it hit 432. So I think, well, I'm actually getting a lower price on the entry. So here's 432, comes back down, hits 0, but never goes below that 432. Certainly didn't take a stop loss because 422 would be my stop loss. And then boom, it explodes here, goes up, hits 100%, and has a high of 472. So here I trade at 4.72. Look at my next trade. Okay, here it goes straight across. And again, if you were aggressive, you could actually hold this. It's going to go all the way to 580. So out to the side, you could put a 580 potential on that trade. If you were more aggressive and just wanted to hold longer for a bigger gain, you have the opportunity to get a max of 580 on that trade. But I'm pretty conservative. So, all right, so there's the 580. It was at 100%. Boom, jumps off a cliff, goes all the way down to 495 on the low, hits 0. 4.95. Okay, goes up, comes back down, hits 0 again. The low is 469. Again, I'm going to take a stop loss on this one because I would have actually sold at 485. Take a loss on that one. 10 cents. Okay. But then it hits 0 here at 469. If you want, you can re-enter there, 469. 4.69. It comes across and it kind of stays at 0 until it hits a low of 427. And I'm just going to have to take another loss on that one, 4.59. I wouldn't have known to get back at back in here, even though this is the last 0. It's just been dropping and dropping and dropping and dropping. So it's tough to say when you should get back in. So it comes all the way up, comes down, doesn't hit 0, comes up, goes down, doesn't hit 0, comes up. You're at 100% here, comes all the way down, hits 0 right here, and I'm going to get in at the low there at $4.93. $4.93 right here. Low, $4.93, goes up, comes back down, has a low of 48, goes to 43, bounces right back up, okay, and then comes up here and hits 531. But actually goes sideways after that, which means it keeps climbing. So if you're aggressive and you want to make up more ground, actually goes all the way to 589. So again, on the potential, you could put 5.89 there just to kind of keep track, see how many times that happens. Okay, from 589, it drops, doesn't hit. Here, we're at 100%. Goes all the way and hits 0 right here. You can get back in at 581. 5.81. Gets back up, doesn't quite touch, goes right back down. Still has a low of 605, never goes. Does hit a low here, but you could actually take a risk here if you wanted to, because you're in at 581. You could actually here right at that blue line peak get out at 636. Because that is a really nice, look at that 55-cent gain, which is one of your biggest gains of the day. So you might go ahead and just lock that one up. And then since you're at the end of the day and you've only got a few minutes left, you probably just stop there because if you look at the clock up at the top, it goes back down, goes sideways, and then ends at the top. So you really don't have a chance to make another trade. But just following this chart here, you've got 10 trades for the day, okay? And you had 5 wins, 5 losses, and still came out ahead $400. And then there's a couple things that I do because people ask questions like, how much can I make per day as a professional day trader? How much can I make per hour, per week, per month, per year? So I've actually got all those calculations. If you had a day that every day was just like today, here's your profit of $400.47. That includes all of your commissions and fees. So this is the $400 is after all commissions and fees. I've got a schedule of all of your commissions here, and that's based on you trading each commission being 65 cents. If you get in for some brokers, let's just say if you can get in at 35 cents and get it in cheaper, you make, instead of $400, you make $414. So you make a little bit more, but it's a negligible amount. So the market's open 6.5 hours for the day, right? And you were in it from open to close from, let's say 9:30 Eastern time to 4 o'clock. You had basically a 50% win rate. You had 5 wins, 5 losses. That's $400.47. That is a total of $61.61 per hour. That's just the 400.47 divided by 6.5 hours that the market is open. Okay. That translates to about $2,000 a week. Okay. Basically this times 5 days a week, right? $2,002 a week. It's going to give you 100K with. So that's a 6-figure income working just a 6.5 hour day, making just 10 trades. And this is actually a pretty, in my opinion, actually a pretty bad day when I've got 5 wins and 5 losses. This is not common. Sometimes I go 10-0, but it's probably more common to either be like 7-3 or 8-2. So even if you're 50-50, I would say that's a pretty bad day. But look, even at 50-50, just because of the extremes on the stochastic between highs and low, even if you're 50-50, you're still coming out $400 ahead for the day. And like I said, you can do it on the call side. You could also do it on the put side. So let's look at the put chart. And we can do the same thing. I'll just look at the settings here. Take candlesticks. Go to the indicators. And this is a chart that's going down for the whole day. But again, there's just a lot of choppiness here. So a lot of opportunities for ins and outs. So let me I'm going to take this same thing, take the whole thing, copy it over, because that's on the call side. And I'm just going to come in here and just reset everything. You can do a whole new chart. And my potentials, all those go away, right? And now you're just starting over clean. And I'm going to come in here and go to the put side. Doesn't really matter if you're on the call side or the put side. We're up top here, dips down a little bit, comes up top, comes up top, comes up top. So there's my high. at 100%, and here's my low at 0. So this is the entry that I'm going to be looking for. There's my high of 100%. Doesn't actually hit 0 on that one. Doesn't hit 0 until right here, and that is an entry on a low at $1.15 on the low side. So a lot cheaper than the $3 range that we were $3 and $4 range that we were trading. So there's $1.15 on the entry. Okay, scoot over and goes. It actually drops all the way down to a low of 98. So we would have taken a stop loss at 105. And this way, again, on 1,300 bucks max per trade. Now you could take 11 contracts. Your total cost is 1265, but it's a loss for the day. Our very first trade, we're down $124. Remember, but that's how we started out on the call chart as well. The first two trades for the day were losses, but then we had some big gains. So we take a stop loss on that one, but it hits 0 again. And here you could actually take the trade here since it goes sideways and hits at 0. So this one you could actually get in at 98 cents. You're getting in at a low on a new 0 and a lower price than your stop loss. So we come in here and take a 98 cent entry. Follow this all the way up to the 100% line, and that has a high of 117. Okay, so now you actually made up your loss on the first trade. You got one win, one loss, and you're up 100 bucks. So that's good. And then we have the same thing here. It goes from all the way to the high, hits 0 right about there on the low of 89 cents. Okay, so you get in here at 89 cents. Follow it all the way up to the 100 mark on the very first 100. And right at the corner, and the high there is 95 cents. So a small gain on that one. This comes here, goes sideways. There's your 100% mark. Here's your 0 right here. You can get in at a low of $1.51. There's your $1.51. Now this one you might have, you're actually, this is $1.42 on the low. So that's 9 cents. We didn't quite get to a 10-cent loss there. Then it jumps up. Now if you don't want to take the risk, look at here on the very first kick up, as soon as it gets above the red line, it actually has a high of $1.63. So just something to note. I'm going to just write that over here on the potential 1.63. Because some people say, hey, if my stop loss is 10 cents on the downside, maybe I just lock it in at like 161. You could actually do that here because this is a 10-cent gain, and the very first uptick there went to $1.63. I'm just saying, if you're more conservative and you just want to lock in that gain, you could do that. But let's just follow the system and follow the method and see how we do. But if you did lock up that gain, if you just wanted 10 cents on the high side, you'd still be up $248 for the day. But let's keep going. Let's see where I'm at. This was okay. A dollar. What do we say? $1.42 on the entry. Oh, that's so it didn't take the stop loss. It went up. Okay, it came back down. Trying to just in my head, I'm trying to keep where my entry is 151, so my stop loss is 141. That's what I was trying to get at. So okay, so it drops back down, never goes to below 141. Gets up to about $1.80. So you had another chance to sell there. Drops down to $1.49. Drops down to 146. 148. You've got a couple opportunities though to get out here from above 151, $1.33. So you're going to end up taking, if you don't lock in that conservative gain of 10 cents, you would actually take in a stop loss because it drops all the way to 133. So you can take a 10-cent stop loss if you didn't lock in that 163 gain. It actually went to 180. You'd still be up, even though you're taking a loss. You're 2-2 here, 2 wins, 2 losses. You're still up 88 bucks for the day. This kind of just bounces up, high, low, high, low. It comes all the way up here, hits 100%, comes back down, doesn't hit 0, so I'm not taking that trade. Comes back up, hits 100, comes here, hits 0 right about there. Take a trade at 91 cents, and then if I can just tell already, just going sideways, it goes all the way to 65 cents. So I would have gotten in at 0.91, but taking a stop loss at 0.81. So I take a 10-cent loss. Now we're down a little bit for the day, right? Okay. Goes up, comes back down. So here's 100%. Drops off. As soon as it hits 0, I'm going to be in right here. That is a low of 68. And where were we? Low of 68 right there. Okay, it goes sideways. Doesn't go to 58 though, so it doesn't trigger any stop loss. Comes back up, crosses that blue line actually right here as a high of 70 cents. So we have a very, very small gain there, only 2 cents. Okay. But then right after you lock in that gain, it drops right back down. Doesn't hit 0, so we don't take that trade. Comes up, comes back down, hits 0 with a low of 55 cents on the 0 mark. Okay. Goes from 55 cents, comes up above the blue line, hits 100. It has a high of 77 cents. Nice little 22-cent gain there, right? Okay, comes across, jumps off. Make sure I'm on the right level here. That's the 70s. Okay, that's the 77, right? Comes across. This is it's at 96, so it's not quite at 100, but good enough because it has a steep downcline, like kind of the cliff jump here. So it goes from 96 all the way down to 0 right here. Okay, so you can get in, take the trade there with a low of 61 cents. Uh, Bounces again low, 59 cents, jumps up, jumps down, jumps up, jumps down. 55 cents, doesn't hit a low, comes up, down, goes sideways to 47 cents. So it actually never gets to our blue line there. Drops to 47, so we take a stop loss there at 51. Excuse me. Drop down to 51 cents. We take a stop loss on that one, comes up. Doesn't actually hit again until right here. Here's our trade at 100%. Drops all the way back down to 0 at 48 cents. I'm sorry, it looks like 0 at 45 cents. Sorry. 0.45. As long as it doesn't drop to 35, then we're good. Looks like it hits 36 and then comes right back up. Hits the blue, goes above the blue, hits our 98%, not quite 100, but hits the high there at 41 cents. Let me just make sure I read that right, because we actually, even though it goes all the way up and goes sideways, we actually take a little bit of a loss on this one. It comes all the way up to the high, hits a high of 41 cents. So we actually I sell there, even though we're not in profit. It still hit that blue line. It went above the blue line. I hit almost 100% peaks there. So I'm still going to take the loss on that one because I'm waiting for the next cliff jump, which is right here. Comes down, hits 0. Okay, get in for a trade of 35 cents. Get right there. Okay, there's my low of 35. Drops a little bit to 31. Doesn't hit a stop loss. Comes back up here. Peaks. Right, hits 100, and you have a high of 37 cents. Again, 2-cent gain. Not a lot, but we'll take it. Okay. This doesn't actually hit 0. That one doesn't go from blue to 0. Trying to look for another one that comes from blue. This one is only at 74. And it looks like you really don't have another trade for the rest of the day because this one hits high, doesn't hit to 0. This one hits high, but doesn't hit 0. This one hits high, hits 0, but then the market is closed for the day. So that's all the trades, even on the put side. So, and I wanted to show both because here on the call side, the market was actually up for the day. So if you're trading on the chart that's going up, you make $400 for the day. If you're trading on the put side, though, um, you still take 10 trades. Ironically, it's just coincidence. It works out this way. You're still 5 and 5, so you're still only at 50%, but you're still up $54 for the day, even after all that. So it doesn't give you a great hourly rate. Obviously, it's only. I mean, if you're making 54 bucks a day, you got other problems. It's not a lot. It's only $8 an hour. It's only $273 a week. It's only $13,000 a year. Nobody's interested in making $13,000 a year. I'm certainly not. So but again, if you're following the chart that's going up, you come back over here, you're making 400 bucks a day. That's 2 grand a week, and then you're making 6 figures a year. And you're your own boss. You're never putting in an 8 hour day. You're only working 6.5 hours, and you can just trade this every single day. So that is the stochastic RSI reversal method. Hope that makes sense to you guys. If you need a copy of this spreadsheet here or have any questions, I'll post this on the Facebook page. I'll be happy to answer any questions that you've got. So hope this was educational and useful. Happy trading out there, and good luck to you guys. Thanks.